Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, January 26, 2016. Great to see all of you with us. So pleased you could join us on this Tuesday morning. And I hope you all had a pleasant weekend. We're experiencing some lovely weather here. It's like spring is already sprung. Beautiful in the 60s. I hope all of you have nice weather and did not get caught up in that terrible blizzard that some of the country was experiencing. And before we begin, let me give a shout out to our dear friends in archive land as well. Now, let's get going. So please sit back, relax, and enjoy. Here's Gary. Thank you so much.
Good morning, everyone. As you know, today is Tuesday. Gary's Market Forecaster GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the new MPAPE3 software. Also adhere to very strict money management rules, which include never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give me a minute as I open up the charts. All right, let's start off with the euro. I'm assuming everyone can see my chart. And the euro appears to be grinding in, Greg, that A, B, C, D, working on a little stagger step higher in E. So one thing about the E waves that we need to clarify is that it's not required that it must come all the way up here to then bounce off and go down. It certainly can, and we know that it can't go any higher than the C wave, but it's not required to go all the way. Sometimes they go half the way, 3/4, sometimes they do go to the line, sometimes they can even spike a little bit above, but just as long as it doesn't make a high above this C wave, sitting up here at 108.39, 109.83. Got my numbers mixed up. 109.83. So yes, we could go a little bit higher, but we're going to consider this wave 4 complete once price breaks below this 107.09. So the wedge formation is intact. So far, so good. Will we see a little more upside? We certainly could. No more than and no higher than that 109.83. And then once we reverse and head and break down below and head below and break below 107.09, we're definitely going to consider that wave 4 done and downtrend continuation is underway. So let's look at the softwares. We talk about each and every day. Where's my target for the euro? Well, it's no higher than 109.83. More than likely should go towards the blue line. But again, when you're talking a compacting and contracting wedge here, the E wave is not required to go all the way up to the blue line. It can go partial of the way and then still break down and still be a legitimate wedge. So with that in mind, we need to go to the software to see whether or not this up move is over, or we're going to see a little something left, then the top end reversal. So we're expecting the daily, as it continues to turn over, and it's not showing signs of engaging up right now. So maybe that's the end of this little rally on the euro. The 4-hour, as we watch the daily, the 4-hour is in the process of slingshotting lower. Well, it's not a guarantee. The daily's down. We could see part of this correction and our little up, down, up, that this could disengage, continue higher with the 4-hour as it moves into overbought territory, allowing this to perhaps rally towards that blue line, and then top in reverse and start heading down. But we clearly see, based on the daily headed down, trend momentum and PAI right now, and weekly starting to engage over, that we're probably not going to see too much of a rally left. Perhaps we will get that little foreman to disengage, let it rally a little further, then turn over in the midst of the 4-hour down, the daily down, and the weekly down. So that's why I can't say 100% that it's guaranteed to be over. I would, if I'm going to scalp this, I would watch the 4-hour slingshot. If it fails, then that's a potential scalp back up toward the previous high and likely to go a little further before the top in reversal. So in this case, on the Euro-Dollar 4-hour Ichimoku, we might see if it does disengage, it would rally toward the bottom of the cloud and perhaps maybe a little higher. But remember, this is a contracting wedge, so we're expecting these lows, highs, higher lows, lower highs as we went through this A, B, C, D, working on E. So the question is, was this a little bit of a rally here at the end of our E wave going up, or is this just the first leg of that E wave? And if so, this is why, as we talk about multiple potential wave counts, Greg, that we go back to the basics and we look at the line of progression. If this is going to be wave E still unfolding, then we're going to see this 4-hour turn and hook out and end up with a low, a high, a higher low, and would expect at least to run back towards the previous high and very likely to go towards the bottom of the cloud / maybe even the top of the cloud to finish my A, B, C, D up in E, then the top in reversal. So what if, William Bruce, this little rally was just the extent of that E wave and it's over? It rallied nicely from this low to the high, but it's obviously not to the blue line looking at our wedge coming across. So if we're going to see and say, well, if it is done, then this 4-hour is just going to continue to push lower, 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 lower. The trend momentum is going to cross and start heading lower, and we'll see further downside, not only in the 4-hour moving, but the daily, the next several days, continue to move lower, 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 and lower. So one last time, when we look at a potential of a different wave counts, what do we need to take in consideration? The line of progression. My job is to educate everyone on the potential wave counts because it gives us do not cross levels. It gives us our very specific signs and symptoms along the way that if this is the wedge still forming and we got a little blip here, well, it could certainly blip and can even come back down and bounce off the blue line here. As it rallied, it pulled back. It can rally and pull back again. And perhaps this latest little A, B going up in C, we could have a little 1, 2, 3, 4, 5 finishing that final leg. So that's why, even though it's a little red candle, does not mean it's going to come all the way and break down this direction. It could still go up and go further to complete this E wave. Well, how do I know which one is unfolding? Signs and symptoms. So John Younghusband, if that 4-hour that's engaging down does disengage, then by all means feel free to scalp back upwards. And the scalp should not only include a rally back toward the previous high, but likely to make a run towards this blue line. And as we put that against the Ichimoku, that looks like not only should it turn and hook out, then that could be considered a failed slingshot, which means it should disengage and make a run at the previous high, but highly probable it's going to make a higher high than this one right here, right? So this could be part of that little A, B, and we're starting a 1, 2, 3, 4, 5, where we end up here, and it is going to run up to that blue line. But in order for us to do that, Marty, it's going to be required that this slingshot disengage and fail. And what's the failure look like? It looks like my 1530 in 1 hour, the workforce, moving into oversold territory, which we're in the process of doing that now. And we would see this ultimately turn and go up, forcing the 4 hour to disengage and push price back upwards. Well, what caused the 4 hour to engage down in the first place? My 1 hour, 30 and 15 topping and rolling. So it's wise that it could certainly do the inverse, that once my 1530 in 1 hour bottoms and reverses, that 4 hour slingshot could disengage. Fair enough? So if it is required that the E wave is not done and it's still not finished, then we're absolutely going to see, Greg, John, this turn and hook out. So as I'm extrapolating potential trades and I look for opportunities, I know that when I see a failed 4 hour slingshot turning and hooking out, basically I have a workforce, 15 bottoming and turning up, a 30 bottoming and turning up, a 1 hour bottoming and turning up. That's what we call the workforce, pushing higher, and it combines with the 4 hour disengaging, then that means we should at least see price rally back towards this previous high, sitting up here at 108.72, and could obviously rally a little bit further. Fair enough? So we understand that, yes, we could go above 108.72. We just can't go above 109.83. So that leaves us doorway open for this to rally not only back towards that 108.72, but upwards towards that 109.83, which would mean we'd go towards the bottom of the cloud / top of the cloud before then that top in reversal. And on the structure, on this time frame, it would look like our A, B, C, D, E. And remember, they should always complete, when you're looking at this wedge, an ABC, A, ABC or WXY, still three-wave move, B, then another ABC, C wave, ABC, D wave. Now we need an ABC up in the E wave. The question is, as we're moving higher in this last leg, is this part of a 1, 2, 3, 4, 5? Or is it a ABC? It could still mean it's part of a three-wave move, but the last leg of that can be a five-wave move. So don't get confused by that. Whenever you're in a correction, it should end up in three-wave. Even this five-wave move is corrective because it is a zigzag, a triangle, and the triangle completes in three waves. So even though you're labeling it 1, 2, 3, 4, 5 scenario, it's not part of a impulsive move. It's part of a three-wave count that ends up having 5 touches, if that makes sense. So bottom line is we believe 3 is done. We're still unfolding in that wave forward to the upside. And how does Elliott wave help us? It's GPS coordinates, turn-by-turn instructions. And it gives us the do not cross levels and the all-important make or break levels. So we've been talking about this for a few weeks now, that it's potential of a 1, 2, 1, 2, and then it didn't act like a 1, 2, 1, 2 because it didn't start to robustly move down. So then it showed its way, well, it looks like it's now into a wedge. In the last few weeks of this, we've been talking about this wedge formation, and sure enough, it went up to the C and then did another dip down to D, and so far it's rallying back up in E. So even though it took us some time to ultimately confirm what was unfolding, we still were able to take advantage of the move higher and lower by the cycling time frames. So if you're a trader out there that says, well, I'm not interested in Elliott wave, then don't worry about it. Just take into consideration these make or break levels, and don't worry if it's an A, B, C, D, E, or 3, 4, or 1, 2. Don't worry about any of that, and simply focus on the levels and look at the cycling time frames to give you the direction the move should unfold. I know there's no traders out there that really care whether I make money buying the euro or I make money selling the euro. And that's the beauty of the Forex market. You can make money buying and or selling the euro. It doesn't matter if you're long or short. The key is to be on the right side of the cycling time frame in order to get successful trades. And that's what this system does. It gives you the highest probable trades based on the signs and symptoms as the time frame cycle. So again, if this is the end of D going up in E, and this so far is just the beginning of this journey higher, then that 4-hour slingshot down is going to disengage. And when it does, based on the 15, 30, 1-hour bottoming and reversing, the 4-hour turning and hooking out, then expect we're going to go back up. Minimum back towards this high and above, likely to make a run towards this blue line. So far, so good. So one more time, this 4-hour Greg Toussaint is going to disengage and turn and hook up if this wave E is not done. And it's probably likely we may see that because this is a little shy. Obviously, wave 3, A, B, C, D, E should go higher. But again, I just wanted to emphasize this morning's topic that the E wave is not required to go all the way to your trend line. Typically it does, but it can go short of the trend line. It should make a run towards it. There are other times it goes halfway, and this is about halfway now. So it's not a guarantee that the 4-hour is going to disengage, but that's how I will know. Right now, if I took this 4-hour slingshot down, I should be peeling off profits. If I'm in a short side right now, based on that 4-hour engaging, great. It made some pips, but my 15, my 30, and 1-hour starting to move toward oversold territory. So I would take profits off the table just in case the 4-hour does disengage and rally higher. And if it's not complete, then, like I said, the signs and symptoms will follow that the 4-hour is going to disengage and it's going to rally upwards, and we should see a break of a new high, not this high over here, this current high here of this morning, and look for a new high as we rally towards the blue line. Now we have a new tool in our toolbox called the Ichimoku. And on the Ichimoku template, we have where we rallied, broke the gold line, went to the purple line, bounced off of the purple line with that slingshot. So this is an ideal time to take a quick sell because the 4-hour was engaging off of the purple line, and it should at least go down to the gold line. And if it breaks the gold line, yes, it could go a little bit lower. Well, as long as it's engaging, yeah, it could go lower. But what happens when it disengages and we end up with a low, a high, and a higher low? This last 4-hour slingshot started to form here and then engage down there, started to form. So as long as we stay above this swing point low, and that swing point low currently is 107.87. 107.87. So if we stay above 107.87 and end up with a higher low, and this does in fact turn and hook out because my 15, 30, and 1-hour are turning up, trend momentum, PAI are moving higher on the workforce, this disengages, then by all means we're expecting this to rally back towards that 108.73, which is another 50 pips, 50 plus pips, right at it. And could go higher, and the next level would be the bottom of this cloud, sitting up here at 108.92. And what if it breaks that? It could go up here to the top of the cloud, right around 109.12. So I'm going to watch this. The bias is perhaps this is not done, right, Greg? The 4-hour is going to disengage, then it's not done. It's going to go higher. Where should it go? It should go back towards the previous high and higher. High probability it's at least going to go here, and even a high probability it's going to go higher than that, but extremely high probability at least make a run towards 108.72 and likely to go into the cloud / top of the cloud. And then on this graph, it will look like this rallying towards the blue line before it then tops and rolls. So don't count this out because this little dip here in the 4-hour engaged down. If it fails, that is a high probability that we're not finished and we're still completing this wave E within this wave 4 blue. And what does all that have to do with anything? Remember, As long as we stay below this previous swing point high up here, which is my C wave top of 109.83, we're good. The wedge is still intact. So we can rally all the way towards 108.93 as long as it stays below it. And very likely it will go to the blue line and not any higher. If it makes it that far, it should go to the blue line, but not required to go any higher. Absolutely no way, shape, or form can it go above that 109.83. So that's why, whether you want to listen about Elliott wave and the potential wave counts or not, it's not a requirement, but it does give us these critical make or break levels. So in closing, look for this more than likely to fail, start to rally towards that 108.72, and rally towards the top of this blue line, or actually the bottom of the blue line, which is completing this A, B, C, D, E wedge, at which point, once wave 4 blue is done, we're going to see price break down and not only start to head lower, but take out 107.09. And once that occurs, I want everyone to consider this wave 4 blue complete. Okay? The other option is, well, what if it's not this wedge formation, which it sure looks like it, it's acting like it, right? What if it's not? There's another option out there that's the alt count, lower probability, but still possible, that this initial move is my A, and my B is not done here, it's still working on it over here. So we have this initial phase as an A, this next down move is my B, and now we're working on our way up in C. Well, William Bruce, what if that's the case? Well, if this is B going up in C, then not only are we not going to see price come breaking this new low over here, but we're going to see this not only start heading back towards the top of the wedge, it's going to take out this do not cross level. It's going to go on and absolutely invalidate this count by breaking 110.86. And if I see this rally and break this high over here, 110.86, then it sets very well for the A, B, and the C. But again, that is an alt count. It is least likely to occur, but it's possible. So I would need a lot of signs and symptoms before I break 110.86. Numerous opportunities and signs and symptoms. But once 110.86 is taken out, we still have upwards of about a 700 pip rally, making a run toward the previous high of 117 here. So that would still give us hundreds and hundreds of pips toward the upside that this baby could climb. And an A, B, C. Possible. Well, I'm not even going to entertain this very seriously until after we see it break 110.86. So if we see price rally toward here and down, we break this low out, I'm still thinking we're in the 4 going lower. And up and until we break this 107.09, then this wave 4 is probably not done. Right? So if it means it fails on that 4-hour slingshot and it grinds up higher to then bottom reverse and take these out, great. We will consider wave 4 blue complete once 107.09 is broken to the downside, taken out. Up and until then, we should probably expect we're probably still finishing this little grinding E wave higher. And a sign and symptom, one more time, if you joined us late, of this E wave is still unfolding, would be that 4-hour slingshot to disengage. Now again, it's not a guarantee that's going to happen. It's going to occur. But should it disengage, then it's a high probability we're not only going to rally back towards 108.72, but we're going to rally towards the bottom of the cloud and maybe even a little bit higher, which on the scale looks like price moving up towards the blue line. Any questions? So how far can it rally up toward the blue line? Should go no higher than at 109.83. That's my A, B, C top, 109.83. So if we do rally to the blue line and break a little bit above it, it should go no higher than 109.83. And as long as these are being honored, the next patrol should be, once it's finished that upcycle, my foreman and workforce finish the upcycle, we're going to get a strong down cycle with a daily down, a weekly engaging down, and a monthly down. So we're going to look forward to strong downside movement once that wave 4 is done. The pound. The pound's in the process of grinding toward the upside. It appears we're in a subdividing 1, 2, and now that we breached a couple of these low-hanging fruit, must mean we're in this 3, 4 going higher. And we have a 1, 2 blue subdivided 1, 2, 3, 4, 5 magenta, giving us the 3 blue, and now we're working on a little A, B, C back up to complete this wave 4. So I would expect the pound to grind higher now, making a run at the previous high, sitting up here at 143.60, maybe another 90 pips plus, to maybe probably make a run at this previous battle zone sitting over here at 143.90. And we should complete this in a 3-wave move. 3 complete, A up, B down, C higher. A, B, C. And why do we think we're still going higher on the pound? Because the daily is still pushing up. It's not engaging over. It's not finished to the upside. At which point do we think it's going to be over? When the daily starts engaging, and so far the weekly starting to slightly turn up. Long term, I expect to see we're going to see this move lower once the correction is over, and my daily ends up turning back over, then this weekly will turn back over and continue in the downward direction. Any questions? So far, the pound is doing what we expected it to do from last week, this wave 3, working on a 4 correction. And yes, it went higher. Yes, it got a pullback. But remember, should end up with a A, a B, and a C. And that doesn't mean it's going to go like that, end, and come straight down. It could be a combination correction. It could be one among many. But clearly, when we start looking at a 4 correction, we're expecting some chopping, overlapping, sideways to higher correction. And then once it's over, downtrend continuation, here we come. Fair enough? So again, we'll continue to watch the signs and symptoms. I can trade alert, sell the daily slingshot whenever it engages. Whether it's later today, it's tomorrow, it's the next day. I can certainly sell that daily slingshot no matter what. Right? I can sell it, so I would end up with a low here. It's rallying. This low is part of this daily still going higher. So it's part of a stair step as it's unfolding and forming. Once it engages over, I can always sell a daily slingshot, whether I'm in a wave 3-4 correction, I'm in the midst of a strong downtrend or an uptrend, doesn't matter the direction, I can always sell a slingshot to the downside. The question is, during the process of it engaging down, does that weekly turn with it? If it does, then we're going to see a lower low. If the weekly slightly turning up does not turn with it, then we may see a low, a high, a higher low, based on this daily slingshot engaging, disengaging, and then giving us a deeper retracement. Well, right now, the pound is expected to rally back toward the previous high of that 43 range. Why? Because that's what it's supposed to do. It's supposed to complete in a 3-wave move. If this so far is my A and this was my B and we're working on the C, then we must at least go back toward the high and likely to go a little higher. Where from the big picture, we can take from the swing point high to swing point low, since we did get a new low since the last time we did this exercise. We could take the Fibonacci retracement from our wave 2 top, drag it to the bottom of where our wave 3 bottom is. So move from the top of 2 down to the bottom of 3 and look for this Fibonacci style retracement. Is it guaranteed to go that high? Well, in the midst of strong downside movement, there's no guarantee that it must go up here. It's just likely it's going to make a more sturdy, more time-consuming retracement. So if my daily does come up and engage down fail, it could easily last a few weeks, and we could easily make it up here. But remember, it is chopping, overlapping sideways to upwards correction. It's just not straight up and straight down. Long term, based on this subdividing wave counts, we clearly expect to get a lower high over here and then a lower low as we continue to stair step our way down long term. So in closing on the euro and the pound, we're likely to see a little more upside on the pound because the daily's still up. The euro daily's down at the moment, but my 4 hours in the process of perhaps disengaging, which would allow for the foreman and workforce to push price a little higher towards that top of that blue line, or at least on the 4 hour euro, Ichimoku, at least toward the bottom of the cloud. So we should see this rally back up toward the bottom of the cloud, maybe a little higher. Turn and hook out. That is a key that we're definitely unfolding this way. Just because it's bouncing right now, if this doesn't turn and hook out, then we're not going to go way up here. The only way, Greg Toussaint, we could turn and hook out and go way up here would be for this to turn and hook up. Fair enough? But remember, trend momentums are still up. They're just temporarily overruled by an engaging slingshot. So if and when this does disengage, we're left with what? Trend momentums back up. Everybody with me so far? Right? And that would allow for the 15 to go in overbought, the 30 to go in overbought, the 1 hour to go in overbought, the 4 hour to go in overbought, and that would allow for price to grind its way higher. And that's what appears that will be playing out. But again, watch for your signs and symptoms. The pound, I believe, is clearly in a corrective phase. That's why we're getting some overlapping sideways to upwards correction. And the pound is clearly, wave 3 is done. We're working on that 4 higher. And again, if that initial move was my A, this is my B, we should go up toward the previous high and higher to complete the C. But just because that's over at an A, B, C, it could come down and make that a W, come down in an X, go up in a Y, and a combination correction. It could end up being one of the euros and being a more time-consuming wedge. Go up in an A, down in a B, up in a C, down in a D, up in an E, and end up taking literally weeks and weeks to complete. Well, that's why we trade the line of progression, and we trade it accordingly, watching for signs and symptoms. But clearly, as the daily is still up, we expect price to move higher. No ifs, no buts, no ands. Whether it is that A, B going up in C, and whether or not it ends up in the daily engages down in the coming days. Can I sell that? Yes. So right there, when this turns over and engages down, can I sell it? The answer is yes. And as it's engaging down, it should take a few days, not a few hours, but a few days to not only form to engage, but once it engages, it should take a few days to play out. And as it does, we're going to keep an eye on the weekly. At that point, when my daily starts engaging and we're moving lower, does this weekly that's turning up flip over? If the answer is yes, then expect a lower low. If the answer is no, then that daily slingshot engaging down is likely to fail and end up with a low, a high, a higher low, disengage and go back even higher, allowing the weekly a little more time. But long term, whether this turns to be a few days or even several weeks of a correction, the key is it is a correction. And once it's over, it's going to return to the downside. All right? So again, we could see a little more upside. Hint, hint, hint. My daily's saying we're going to see more. So yes, we could see this go up, and we might even see the daily days from now engage down, move back down. And ultimately, from the daily perspective, maybe that's a little A, B, C, W, come down in an X, back up in a Y, and it's more time consuming in a combination correction. Or perhaps it's working on an A, B, C, and that gives me an A. Then an A, B, C, we get a B. And then an A, B, C, we get a C, and then a D, and then an E. similar to what the euro did in its wave 4. No way to tell. That's why I keep telling you, Al, I don't care. John, Greg, doesn't matter if it turns into a wedge or it's a combination correction or a simple little ABC zigzag and downtrend continuation. Because during the phases of the cycles, we will see signs and symptoms. And a big sign and symptom that the correction is not over is once the daily starts engaging down and price moves lower, the weekly does stay up and that daily disengages and fails. If I see that in the coming days, goes up in a daily, engages down, fails, then I know that's a big buying opportunity, because whatever that high is when the daily starts engaging, we would expect once it disengages, it's got to rally at least back to that high and likely higher. So this target is still wide open. Not an absolute guarantee it's going to get up here, but it's certainly a viable target for us to rally into this area before it's over. Whether it's an A, B, C, W, X, Y, or an A, B, C, D, E zigzag scenario, we should expect further upside because the daily is turning up and the weekly is turning up. That bodes well for further upside. And again, how do we decipher the difference? We simply follow the line of progression. And right now, my weekly's turning up. Well, do I need to check that every time I want to trade the pound? No. The weekly's not going to change intraday. It takes days, usually weeks, before it will turn and change. But it's not going to just simply change in a matter of an hour or two. So during that period while my weekly is up, I'll keep an eye on the daily. And if my daily stays up, then no way that weekly is going to turn down. It's going to require the daily either engaging down or topping and rolling over to get the weekly to turn. But that's what we mean by follow the line of progression. So we're breaking the goal line. Once we close above, we should perhaps rally toward this purple line. Very possible. Again, it depends on the type of correction. But my purple line certainly is a viable target. It's within that Fibonacci style retracement, and it's likely to make a run towards the purple line. That's what Ichimoku says. That's right around 145.10. So now we're talking a few hundred pips higher. Well, last week and the week before that, we talked about this. Once this was over, we had a door ajar because we had a weekly oversold, a daily oversold, and even though we ended up grinding a little lower, a little lower, a little lower, it was very likely we were going to see a deeper retracement. It's overdue. And sure enough, that's what we're experiencing right now. So look, to buy the dips in the uptrend on the pound, can I sell the daily slingshot down? Yes, but in which I'm selling it, I'm going to take profits off just in case this little ABC engaging slingshot down on the daily is not over and it's part of a bigger, more time-consuming correction. Then I know once I'm in the profit on that daily slingshot, my foreman and workforce start to bottom, and my daily disengages, then I'm by all means going back long. Expecting wherever that high was, we're going to run back towards it and very likely above it. So I'm giving you pictures that not only should we grind higher to let the daily form, but once it engages, it doesn't mean we're going to make a new low. I can sell it, but take aggressive profits. And as I'm aggressively taking profits, I then will look for the potential of a daily slingshot failing, because right now that weekly is happening to turn up. So once it starts engaging, if the weekly stays up and it's engaging another day, stays up, and finally starts to show signs of turning out, then I look to go back long and expect a more time-consuming, deeper style retracement. No guarantee that my daily once engages, the weekly won't turn over. So that's why once I'm in it, I don't say, okay, I'm just going to get in and get out of the daily slingshot. No, I'm going to take profits. And as I start to see my time frame start bottoming, I'm going to take more profits. And if I see the daily turn and hook out, then I'm going to close the short trade and go back long. Because there's a chance it could engage, the weekly flip over, and downtrend continuation, we make a new low. And we don't get one that's so robust and more time consuming. But again, if we do get the daily to engage and fail, then you can consider this wave 4 more robust, more time consuming as price grinds higher in that corrective phase. Any questions on the euro and the pound so far? They're both in respective corrections. The euro's further along in its correction, as we believe that once the wedge is over, it's going to start to break back down. The pound is just getting started in this correction because we still need to see it rally to new highs. And that could be my ABC, but doesn't mean once it's up here and reverts down like that daily engaging that it's guaranteed to be over, because it could turn into a combination correction or a wedge, even more time consuming and more longevity of a correction where the weekly gets involved and it just goes up, down, A, B, C, D, E, like the euro did. And just to give you comparisons on the euro, it literally took multiple weeks for this wedge formation to play out. Long time for the 3 to end, the A to go up, a B, a C, a D, and an E. Right? Took weeks and weeks and weeks. So this is one possibility the pound could end up working its way into. But the bottom line is we highly expect this is 3 working on 4. The pound is 3 working on 4. We just don't know exactly what type of correction will unfold. And that's why I keep telling you it doesn't matter. We use our do not cross levels and important make or break battle zones because it then starts to differentiate what type of correction could be unfolding. Like we saw here, this looked like a very obvious 3-wave move. Well, was that the end of 4 here? And we're starting a 1-2 and a 1-2, but it didn't follow through like a 1-2, 1-2. And it lingered. And it took more time with a lot of chopping, overlapping sideways. So it morphed into what looked like a wave 4 over, 1-2 working its way down to now a wedge formation weeks later. Everybody good? So you don't know. It's too early to tell. But I can get high probability trades regardless of which one is unfolding, even though there are possible several different opportunities for it to unfold in. That's why we always follow the line of progression. Follow the cycles, and as the signs and symptoms manifest from these cycles, trade them accordingly. So I don't think, if I had to go one way or the other, that this 4 is probably over yet. It's going to grind its way further toward the upside. Question is, does it make it all the way to this blue line? Well, we went with the 4-hour Ichimoku, and we said at least once the 4-hour slingshot disengages, it would make a run back towards this 108.72 and would at least go there, if not higher, and could go upwards toward the blue line, meaning the bottom of the cloud and above, but no higher than this C wave top at 109.83. So again, put these levels on your chart, enforce price to prove itself, because once that 4-hour does finish and it disengages, yes, I'm going to look for at least a run towards 108.72, and highly probable it's going to go above that, but does it make it all the way to the blue line? Doesn't have to. So what do we need? Once my foreman and workforce turn back over to a sell, and my daily's down and weekly's down, then I'm selling it. Up and until then, this sell on the 4-hour slingshot, if it fails, then close it, take profits, close it, and look for the rally higher. But give it time. This 4 hours is just not going to turn and hook out in a matter of a split second. It takes time for the 15 to 30 and the 1 hour to cycle from overbought down to oversold. And it's going to take time for it to start to turn up from oversold and make its run toward overbought. But if I see that, my 15 higher, 30 higher, 1 hour higher, and 4 hour turning, hooking out, then, yep, we're going here and likely to go to the bottom of the cloud, if not a little higher. Pound, clearly making a run higher because it's part of this correction. Again, I don't know if it's going to be a simple A, B, C, go up here, make a new higher high, and down we go. Or it turns into the daily engaging down, failing, then disengaging, going back up. Or even potentially into that 1, A, B, C, D, E scenario that's even more time consuming. But no matter how we slice it, whether it's a quick wave 4 or a combination correction or a wedge, it's still corrective in the overall downtrend. Dollar index. Dollar index is still struggling. To no one's surprise, we're still struggling to break 100. So when do we know the euro and the pound are really going to start that downtrend continuation? When this dollar index finally breaks above 100, confirms support, and starts grinding towards 101, 102, 3, 4, 5, and stair-stepping its way probably over the next couple of years toward that 125 and above. We're still not able to break it. We rally towards it and then we chicken out. Test it, pull back. Test it, pull back. Test it, pull back. Head fake, go above and pull back. Head fake, go above, pull back. Test, test, test. Down we go. This is not breaking and confirming support, because once you break it, you need to confirm support, and then that support needs to then break a new high, right? So we should have a higher low by support, then it turns out where it makes a higher high. That's part of breaking and confirming support. I get a break above, a retest of support, it bounces and goes on to break another high. We didn't do that. We had a high, we pulled back, tested, spiked higher, but at no means did we get a high support and then another high. So it tested it several times and failed. Came back, tested a few more and failed. So again, Greg Toussaint, we're going to see this break and we're going to see it confirm support. That's a highly, 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 highly probable and very high probability, but it depends on the type of correction unfolding. It could last literally for weeks or even months before it finally breaks, confirms support, and rallies. But once it does, you can be rest assured, Andres, we are going to see the euro go breaking at 104.61 and head down towards parity. We are going to see the pound start breaking down below its low and head towards 135 and below, etc., etc. But we can't possibly expect the euro to go busting below 104.61 and running towards parity without the dollar index breaking 100. Fair enough? All right. S&P. As we mentioned, Andres, this is still bearish. This is part of this correction. And I've simmered it down a little bit more to make this a little bit cleaner. I know there's still a lot of labeling, so for those of you that may be new to some of this, this is multiple different possibilities of wave count, but it is not confusing. It's simply what potentially could be unforming and unfolding as price proves its intentions. Right now, I believe we have a wave 3 bottom, and we're working on a wave 4 correction. And why do we have a 3 blue and then a 3 magenta, 4 magenta, 4 blue? It depends on which wave count is playing out, the bullish or the bearish. So let's take it, one we believe is still unfolding is definitely either wave 4 down or Elizabeth, I'm coming to join you, honey. At no point do we believe that this is the end of the road and this is the beginning of a long-term bullish move higher, that in even the bullish scenario, we're still bearish. The bullish scenario would be, this is part of a wave 3 over there. This is part of my combination correction, wave 4 down. And once wave 4 is over, we're then going to go up to wave 5, breaking new highs. But in order for us to get wave 4 to finish, we still have more to unfold to the downside. We're still in the midst of a wave, potentially wave 3 of 3. And it depends on which wave count is unfolding, but the bottom line is it doesn't matter because we absolutely expect further downside. And Andres, all of this latest action is corrective. So, if this is the Elizabeth, I'm coming to join you, honey, we're in a series of a 1-2, 1-2, 1-2 scenario, and this latest is a 1-2 green. Oh, wait, yeah, there it is up there, 2 green. So show me the bearish again. It means we have a major top in reversal, that A, B over to the left of the chart, and we're working on our way C down, or if it's a WXY, doesn't matter, same thing, expecting much further downside with Elizabeth, I'm coming to join you, honey. And with that most bearish wave count comes the series of 1, 2, 1, 2, 1, 2, 1, 2. So what is those 1, 2? We have a 1 black, 2 black, a 1 blue, 2 blue, a 1 magenta, 2 magenta, and now we're working on a 1 green, 2 green. Okay? Well, Gary, how much higher can this correction go? Well, that's going to differentiate whether it's one of these wave 4 corrections or it's this wave 2 corrections. And what would that be if we break above 1983? Right? If this is part of a 1, 2 blue, 3 blue going up in 4 blue, then that wave 4 blue cannot go into the area of wave 1. If it's part of this 1, 2, 3 magenta going up in 4 magenta, same rules, because we can't go into the area of wave 1. The only one, Greg Toussaint, that would allow for us to break 1983 and go higher would be part of this most bearish count of a 1, 2, 1, 2, 1, 2, and most recently 1, 2 green. And yes, this can go and break above 1983, but it can't go up and break this previous swing point high. If this is my 2 blue and we're going down into a subdividing 1, then this wave 2 could go all the way up towards this 2074, 2074.50, no higher. So if I see this grind and grunt its way and it breaks 1983, then it's no longer part of this 3-4 or this 3-4. It must be this 1-2. And up until then, the most highly probable is that it's definitely still in a correction and it's not over. So no matter how I slice this, whether it's 3-4 or 3 blue, 4 blue, or 1 going into 2 green, they're leading to the same path, meaning we should see more upside. All right, James? We're in the midst of a correction. The question is it a wave 4 magenta, a wave 4 blue, or a 2 green? What does all that mean? It means in either case, depending on whether it's subdividing 3 working on 4 or subdividing 1, 2, 3 blue going up in 4, it still would not allow us to break 1983 under no circumstance. Is it allowed to? So if this correction does in fact break 1983, then we're focusing on 1, 2. But none of them call for what? Break and continue higher to new highs. Because no matter how I slice this, this wave 4, even the bullish scenario, is not done. It is not complete. And if it's not complete, then we can't expect this to go breaking up to new highs and shooting up towards 2250, 2500. Fair enough? So is this part of my 3 going in 4, whether it's 3 magenta going in 4 magenta or 3 blue going in 4 blue? Yeah. If it's this scenario over here, it's one of these two. If it's 3, 4 magenta, we'd go 5 magenta for 3 blue, 4, 5 for 3 black, 4, 5, and end up down here. So we still have several more pulses or push, push, push to finish the most bullish of the wave counts. If it turns out to be the bearish, and Elizabeth, I'm coming to join you, honey, then we could see a little bit of a bigger rally above 1983, but then we're going to be in the midst of 3 of 3 of 3 of 3 of 3. And once these 3 of 3 of 3 of 3s, what that means, 3, 4, 5, another 3, 4, 5, another 3, 4, 5, another 3, 4, 5, that just gives us a 1. And we start that whole subdividing wave count after all of this, starts with another 1, 2, 3, 4, 5. And that's why it's, Elizabeth, I'm coming to join you, honey. Because we need to see price break down and go all the way back below 665. So yes, we did one thing, and it was obvious, Andres, that this little flash crash over here was not the end of the bottom. And now we got a new low below 118, 1813 range. that all important 1812, 1813, and it's not the bottom. Okay? No way, shape, or form do I see this as a wave 4 over, we're going higher in 5. This is still unfolding best case scenario. Worst case scenario, it's not part of a 1, 2, 3. It's part of that A, B going down in C. And it's Elizabeth, I'm coming to join you, honey. And we're going to get a market crash, and we're going to see price break down, break down, break down, ultimately take out 1350 area. And that sets the tone to where this wave 4 can't possibly extend that far, that it must be Elizabeth, I'm coming to join you, honey. Well, the same scenario, we're not going to diverge anytime soon, whether it's 4 going up in 5 or whether it's Elizabeth, I'm coming to join you. It will not diverge for a long time. So bottom line is we're not finished to the downside. What is this? It's another one of those little false rallies, dead cat bounce, whatever you want to use the terminology, doesn't matter either. But it's going to be not a new high. It's going to be a lower high and a lower low, no matter how we slice it. So James, I want you to take in consideration any of these bounces, which we're likely to make another higher high now, not up here, this higher high. This is likely to be part of my A and my B, and I'm working on my C. But again, I don't know if that's going to be the end of the road and down we go, or it's going to be more time consuming, or if it's going to end up grinding and busting above to be this 1-2 scenario. But all of these say we're going further down, no matter how you slice it. So please consider rallies as opportunities for selling. Rallies as opportunities for selling. Rallies as opportunities for selling. And right now, Andres, we're not going to go breaking new lows yet. We still have more sideways, chop, 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 sideways to upwards correction. That could last as few as a few more days to as many as several weeks. Just like the Euro 3-4 took weeks and weeks and weeks. The Dow, or in this case the S&P 3-4, could take literally weeks. And if it turns out to be the 1-2, it could even last a little bit longer. But one thing, it's not so much about the duration of it, is that if we break 1983 up here, which is that swing point low, then we're definitely in a 1-2 correction. And believe it or not, that's the most bearish of them, because that puts us in another 1-2 black, 1-2 blue, 1-2 maroon, 1-2 green. 3 of 3 of 3 of 3. So Gary, what if, let's take all angles, right, William Bruce? Well, what if we go up here and we don't cross 1983? Could we still be in the midst of this? Yes. Just because a 1 wave 2 higher does not mean it must go above this 1983. Fair enough? So I'm giving you every angle possible. Well, if we go up here and we come down, we start heading lower, it could be C4 down here, just down the scenario. Or it still could be Elizabeth, I'm coming to join you, honey, without breaking 1983. But if I break 1983 and go higher, then it can't be anything but the next 1-2. Everybody good so far? If I break it, then it must be the 2. If I don't, it could be the 2, could be the 4, could be either one of those, but they still say we're going down. And no matter how I slice it, 1-2 or 3-4, it still says we're going lower, best case scenario. Now let's look at the software and understand how and why that is the case. As we go through the process, whether it's a 3-4 or a 1-2, why it's the process. And why are we looking for this climb high? Well, my 4 hours engaging up. Part of a little correction, we're going higher. That's good. And Gary, because the 4 is engaging up, should we expect a new higher high? If this is part of an A and that's a B and we're working on C higher, then yes. And the reason it's likely to go on and make a new high here, Greg Tucson, is why? The daily's still up. So not only are we expecting further upside, Andres, because the daily is up, but as we go through the process, my daily is depressurized. Good. We like depressurization. And while it's depressurizing, is the 4 hour going to end up turning and hooking? Or is it going to kind of flatten out, daily engage, and we break new lows, and this baby turns over and we continue down? This is why this could potentially turn into several weeks of a correction. If my daily continues higher and we don't slingshot down, or we slingshot down and fail, then it means the weekly's ready to give us a little depressurization as well. And this could turn into one of those double combinations, triple combinations, could be a wedge, right? Take much longer for the correction, but no matter how we fix it, no matter how it turns out, bottom line is we're going lower. I want everyone to be crystal clear. Whether it takes a few days to finish and we make lows, or it takes a few weeks to finish and we make new lows, we're making new lows long term. And we're going to watch that through the line of progression. So in the interim, while my daily is still up, I got a 4-hour engaging up, look for this to grind higher. And look for it to make a run beyond the previous high, which is not too far away, from this rejection wick to a pullback to a rally back up. And this is why when I look at it from a weekly perspective, this big reversal, hammer if you will, reversals candle, does not mean the downtrend is over. In the last crash, if we go back far enough, I'll turn off the auto scroll. Let's see if it allows me to go that far back. We will see that we have a rejection hammer as well, and it wasn't the bottom of the market. It was just simply part of the correction within the overall downtrend. Right? So let's see if it'll allow us to go back that far. I know it's a few years. Hopefully it will. But I remember seeing that exact same scenario during the big crash. Everybody see that? Oops. Big massive rejection wick along the way as it started to make its way down. We see hammers. We see hammers. And it wasn't the end of the reversal. It was part of the correction and the overall downtrend continuation. We saw hammers several times. There. Top and reversal. Uh-oh, is that the end of the crash and we're going back up? Woohoo! No. Rallied, lower high, lower low. Then it pulled another one off over here. Oh, another big push. Okay, that's got to be the end of the crash. Sure it is. No. So you notice why I'm a big proponent of candlestick formations, yes, but not without the trend momentum and the PAI. Because as this was starting to give us the rejection wick, what's unfolding? We're depressurizing during the rejection wick, but we slingshotted right back over and the trend momentum's kept going down. Then on the next rally, it did the same thing and slingshotted lower and lower and lower and lower, over and over and over. Even on that latest rejection wick, what's happening? Well, yeah, we're starting to get a little depressurization as it rallies, but then what? It slingshot right back over. And then did it again and again. Okay? So James, no matter how I look at this, I can look at it a variety of different ways, and there's no sign, symptom, or whatever that sees this bottom reversal as being the end of the road. I expect we're going to get more of a correction, yes. Yes, we're going to grind and grunt it higher, but we're going to end up with a lower high no matter how we slice it, and a lower low. Even the bullish of these scenarios says this is not that wave 4 complete going up in 5. We still have unfinished business to the downside. And with the government willing to maybe do another TARP, another QE, who knows what they'll end up doing when the market starts to really crash. I can't guarantee that we're not going to see the 4 going up in 5. It's possible. But this is the good point, that no matter how we slice it, bearish market crash along the way, or more bullish of the bearish, we still need further down, and this is part of a correction. So this rally, take it with a grain of salt that it's going to end up with a lower high and it's going to end up with a lower low. And whether it has more legs that last longer or a shorter duration, The critical level to watch is 1983. And as long as we stay below that and we go on to break a new low, then it's one of three possibilities. 3-4 magenta, 3-4 blue, or 1-2 green. If it rallies and breaks 1983, then it can't be 3-4 magenta, 3-4 blue. And what's the difference in the two? It's just part of how you look at the subdividing wave count. That's it. Both are calling for further downside on the bullish scenario, and obviously the bearish scenario calls for much, much further downside. But that's the difference in 3 magenta, 4 magenta, 3 blue, 4 blue. But they're going to act identical. It's just about how far down do they go. Do we have more subdividing wave counts with 3-4 than a 3 of 3? Or is it already 3-4 and we go to this 3 black, which obviously if it's the latter, 3-4 going into this black, we won't go quite as far down with this wave 4. If it's 3 magenta, 4 magenta going down and 5 magenta to then make it wave 3 blue, then 4 blue, 5 blue to make 3 black, then 4 black, 5 black to make this wave 4, then that one would travel further down. I still say no matter which and no matter how I look at the subdividing wave count, for the best case scenario, we're still due for 1730, 1647 minimum. Okay? That's why it's been on my chart for months and months and months and months. And during corrective phases, traders get one-sided and they think they got all the answers. But this is part of the correction. This thing could literally last for weeks and weeks and weeks and weeks. Could turn into a wedge and then break lower. But the bottom line is, as long as price stays below and we get a lower high over here, then it's still headed lower. And up until I see a new all-time new high, would I say, uh-oh, well, something's changed. But that's not going to happen. Not now, not yet. If it ever happens anytime soon, then it must be the 4 going up in 5. Otherwise, I'm expecting further downside. Well, Gary, is it possible we could see a 1 and that 2 and it breaks the 2074? Yeah, I could maybe do that with an expanded flat correction. Remember, my 2 could go a little bit above this area, but it shouldn't break a new all-time new high from 2074 to 2133. It could come up here in this area and make a higher high. But even then, doesn't mean it has to do that. So that's why I don't want to confuse you with multiple labels. Simply follow the line of progression and know that this rally is going to continue. Yes, my daily's up, so it says so. I don't have to worry whether it's a 3-4 and magenta, it's a 3-4 blue. My daily trend momentum and PAI are up. That says we're going higher. My weekly starting to turn. That means we're going higher. Everybody good? Doesn't tell me which one it's going to be, whether it's going to stay below 1983 or lower, or it's going to go above that and go lower. But it definitely means we're going to see some further upside. And when can I go to the short side of the market? When I see my foreman and workforce topping and rolling in my daily engages, can I sell that? You betcha. You better sell it. But it doesn't mean it's guaranteed to make a new lower low. It's possible it could, but it's not guaranteed. So what does that mean? When I sell the daily slingshot, what am I going to do? I'm going to take aggressive profits. Why? Because my daily is already still depressurizing further, and my weekly already is showing some signs, as far as the PAI, of slightly turning. Everybody with me? So Gary, even when I sell the daily slingshot down, I know automatically, even before it happens, I'm going to take aggressive profits. Well, does that mean there's no way, shape, or form it can make a new low? Sure it could. How? Well, my daily engage and stay engaged, stay engaged, stay engaged, break new lows, and the weekly does what? It just flips right back over. Or my daily could go up, engage down, make numerous points, lots of points, Andres. As we go higher, it can make lots of points to the downside, but end up with a low, a high, and a higher low. And my daily goes on further as my weekly starts to depressurize. But I will definitely have signs and symptoms. During that sell, when I take aggressive profits, if I see the daily turn and hook out, then I'm going to close that short trade and go back long and scalp back up. And even with the daily engaging, disengaging, failing does not mean we're going breaking all-time new highs and 2250, 2500, here we come. No, I don't see that no matter how I mark it. Still need further downside. Bottom line, we're getting a deeper correction. Don't necessarily know if it's going to stay below 1983 or go a little bit above in that area. It could go above. But it should not break this swing point high here at 2074.50. That would be a part of a 1-2 and should not go on and break that. So far, so good. Well, Gary, could this thing last several more weeks, even a few weeks in a correct? Sure, it could. My daily could engage down, fail. We end up with a low, a high, and a higher low, and we ultimately grind further, and the daily moves from oversold all the way to overbought. And my weekly depressurizes to then slingshot lower in the coming weeks. Sure, it could. And then one more time, it could turn into my 3-4 and end up being a wedge. That's even more time consuming and takes weeks to be an A, then a B, then a C, then a D, then an E, like the euro has done. Okay? So whether we're looking at the euro, time consuming, does the pound take this shape? Does the S&P take this shape? No matter how we slice it, whether we're talking the euro, we see further down, the pound we see further down, and the S&P we see further down. All across the board, no questions asked. So look for rally, yes. Look for a new high, yes. And even if this ends up turning to a slingshot from a higher high and goes down, Andres, doesn't mean that wave 4 is over or my 1-2 is over, that we're absolutely guaranteed to break new lows yet, because it could turn into an A, B, C, W, down and X, up and Y combination correction, or it could turn into that triangle, or it could be some other formation right now. Wave 2s have upwards of like 23 different potential corrections. 23. Imagine if I told you all 23. And while it's unfolding, you don't know. It could be one of many. That's why these critical levels come into play, and it starts to slowly invalidate potential corrections and start to leave you what's left. But again, don't get hung up on, is it a 3-4, is it a 1-2, what is it, Gary? Line of progression. You should be on the long side looking for this to rally higher and ultimately, yeah, lower to come, but this correction is not over. Any questions so far? Black Gold, Texas Tea, the Beverly Hillbillies. Well, I've updated this as well. We had part of that 1-2-1-2, and it shouldn't break this level. It did break the level. Not by a lot, by a couple of ticks. So then what did I tell you last week? If we see it rally and break that previous high over here, I can't still have 1-2-1-2s, that it rallied above the previous two, so then it can't be that. So now my latest updated count, as I mentioned last week, well, it must mean my 3 is over going up in 4, because that would allow us to rally all the way towards 45.78. So it looks like we have a 1-2 blue subdividing wave 3 blue down and 1, 2, 3, 4, 5 magenta. Now we have 3 blue done. We're working on 4 blue, and then we're going to go down in 3 black, 4 black, 5 black to finish this correction down, to ultimately finish this wave C, which finishes this wave 2. This bottom correction is not over. Just like I've said many times before, James Browning, yes, we broke to new lows, so it's even likely it could be the end in reversal, but I don't see it that way. I don't see it as being over. This is simply going to be a correction before another push lower. Fair enough? Another correction before it pushes lower. And why do we think we're not finished with the correction? My daily is still up. Isn't that a recurring theme? Daily up, oil's going higher. Daily up meaning the trend momentum, PAI right here, and the trend momentum. So Al, back to the basics. We have a daily trend momentum, 1 and 2, and price action indicator, PAI, up, up. What's oil prices going to do? Grind its way higher in the midst of a 3-4. Well, that could turn into, again, a massive wedge that takes weeks and weeks and weeks. It could turn into a quick zigzag and then pop and roll and down we go. It could turn into a combination correction. It could be one among many, but that's why we follow the line of progression. I got a weekly turning up. I got a daily turning up. So what does that tell us? We're going higher on a correction. Any questions on Black Gold, Texas Tea, the Beverly Hillbillies? Well, Gary, where do you expect this correction to go? Even if this is the simple A, B going up in C, we should at least go back toward this high. We should break 3250 and make a run up here towards this 35 range. Likely to see it rally that direction. This is a massive battle zone over here, former support, turn resistance, massive battle zone. So Gary, can we go higher than that? Absolutely. This 3-4 could go all the way as high as 45.78. Price must stay below 50, must stay below 48. Now, if this is correct, 1, 2, then a 1, 2 blue, 1, 2, 3, 4, 5, 3 blue, 4 blue, then we cannot go into 45.78. So I would say the likelihood we're going to stay below 45.78, giving us a lower high, then a lower low, is extremely high probability. Greg Tucson, it's extremely high probability we're going to stay below 45.78 and we're going to make a new lower low. Next question up. Does it need to rally that far before we get a lower low? No. And a lot of that will come into play. What type of correction is this wave 4 going to be? Is it going to be a very deep, more time-consuming daily/weekly style retracement that turns into a much longer, more robust retracement? Or is it going to be more muted? Well, only time will tell, but that's why, for now, look for oil to rally back towards 3250, and high probability it's going above that. A good area once it breaks 3250 to run towards would be this previous 35 range. Right? Now, what is the 35 range? That represents my former swing point low. Let me go to the monthly. Remember when we had this bounce? Fell off a cliff, boom, bounced. That's the 35 over here. Everybody feeling me? So Gary, where should price go? It should go to 3250. Is it going to go straight up? No, it's going to stair step its way up there. But it's going to break. It should go to 3250, should break that. And a good place for it to run to is this 35. Because this represents the former massive support that it stayed above and bounced off of. Huge bounce. Went from 35 all the way back to 116 range. Got a high of 114.80, looks like. Yeah. So it went from 35 to 114 off that bounce before it started to break it back down. Now that we've taken it out, which we said highly probable we would, a nice area for this to rally back to would be that. Well, Gary, could it break back above it? Sure it could. Back to my 1, 2, 3, 4 scenario. If this is my 3 blue, 4 blue, then we can rally all the way back up to that 1 blue, no higher than 45.78. Highest probability, Gary, we're going to get a lower high and a lower low. You betcha. Okay? I don't think oil prices have bottomed in reverse. And if we start to rally and they see a big rally coming, listen to the talking head. Ooh, oil's bottomed in reverse. I told you so. Well, I say no. Even with a robust rally, I say no. That it's simply going to be a rally because it's a long short squeeze unfolding and they need to let it go and depressurize. The time frames are overdue, right? My weekly was oversold. My daily was oversold. it is overdue for a retracement. What happened the last time we got a little bit of a rally? It slingshotted lower. So there's no guarantee that once the daily finishes its cycle and we go back up, make a run toward the previous high, maybe even that 35 range, that we don't end up slingshotting lower off the weekly and down we go. Yeah, it's possible. So in closing, James Brown, in closing, Andres, I highly expect oil to grind its way higher. As I go to my daily view, I highly expect we're going to get more to the upside, chopping, overlapping, sideways to upwards correction. We should at least see a new break above this 32.50. I think it went to 32.70, 72, whatever it was. A few cents above that 32.50, 32.71. So I would at least expect 32.71 and higher. And like I said, once we take that out, a magnet to suck price to would be the former support. And let's see if it tests it for resistance and heads down, right? Let's see if it can rally this way and then go down. Well, Gary, could it go higher? Yes. And is it possible this 3 could even break 41.20? It's possible. I don't think it's going to go quite that high, but it's certainly possible. And if it does, this is where you start, rubber meets the road. Price must stay below 45.78. Why? 1, 2, 1, 2, 3, 4, 5, 3. So I got a 1 blue, 2 blue, 3 blue. 4 blue cannot go into the area of wave 1 blue. Any questions? So Gary, I guarantee we're going higher above 32.50. Likely target we're going to go and grind its way to in a chopping, overlapping scenario should be make a run towards 35. It could go higher, substantially higher, but it can't go above 45.78. Well, Gary, what if I'm using a different platform? Then I want to go to this date and time where my low is 45.78, happened on October 15th, 2015. So go to October 15th, 2015 candle, whatever that low is, that is my do not cross level. So if it's not exactly 45.78, that's okay. Whatever that is, should not go above it, and I don't expect it to. Again, based on subdividing wave counts, a lot of times we don't get those very deep, robust retracements. There are possible, but a lot of times we don't. We don't. So is this possible it could go up here and then reverse? Yeah. Could go higher, but again, that's why William Bruce, my daily trend momentum and PAI are up, my weekly's turning up, so what does that tell me? We're going higher. Amen? We're not going breaking any new lows just yet. We're going higher first. And I'm telling you that in advance. We're going higher first. Should at least go to 32.50, break that 32.71, and make a run towards 35 minimum. Well, when do I look for a sell? When the daily engages down. If I get a daily slingshot to engage down, can I sell it? Yes. But I would expect more than likely if my weekly's turning up, there's a chance the daily will do what? Go up, engage down, and fail. But doesn't prevent me from selling it. So what's the key? You got to look both ways before I cross the street. Before you cross the street, even though it's a one-way, you don't need to look just that one way, because what do we know? People don't pay attention. They could be going up a one-way street the wrong direction, and you step out thinking there's nothing coming from the left and not think about some yo-yo going up a one-way street. So before we cross the street, we look both ways. Before we trade, we look to make certain we have the foreman and workforce without trade. Then we look to the right to make sure, is it going with or against the bigger trend? So even as my daily goes up and engages down, William Bruce, if my weekly's up, there's a good chance it's going to fail. I can still sell it, but what's the key? You're going to take aggressive profits. And should I then see in the coming days my daily goes higher, it comes up, maybe it runs up here, daily starts engaging down, and as it starts to move lower, I notice, uh-oh, 4 hours bottoming, workforce is going up, daily slingshot's disengaging, then wherever that low is, more than likely going to be from a higher low, is going to do what? It's going to reverse and go back up again in some other type of correction. So could this be A, B, C, 4 over and down we go? Yes. Could it be A, B, C, 4 we go and it ends up being W, down in X, up in Y? Or could it ultimately be the A and we come down into B, the C, the D, the E, and we do a lot more sideways correction, more time consuming, and then down? Bottom line is, no matter how I slice this, and as long as we stay below 45.78, I see it as making new lows, and this not being the bottom reversal. All right? So this is line of progression. Those of you who've never heard of the term line of progression, this is what it is. The software, trend momentum, price action indicator, its job is to go from oversold to overbought, overbought to oversold. Oscillating indicators are supposed to go from one extreme to the other. Well, the old thought process was oscillating indicators are great in sideways markets, but they're terrible in trending markets. Well, that's why the trend momentum was married to the price action. And part of this process is the slingshot phenomenon that gives us clear and concise signs and symptoms. So even though the weekly didn't separate a whole lot on some of these, my dailies did. My dailies did. My dailies did. And it forced the weekly to turn back over. Tried to turn up, turn back over. Tried to turn up, turn back over. Tried to turn up, turn back over. Same thing here. My weekly started to turn up, my daily turned over, and it pulled it back down. Right? That was recently. Got a big daily slingshot that ultimately turned into a slingshot engaging and even a little disengage and re-engage. And the weekly did what? Turned over. And we went down several dollars. Well, same thing here. When my daily engages down, doesn't mean the weekly will follow. Well, if the weekly doesn't follow, then it's going to do what? Engage, disengage, re-engage. Everybody good? Go up, engage, disengage, so I end up with a low, a high, higher low, higher high. Engage, disengage, re-engage. So in closing, look for this to grind and grunt its way towards 32.71. High probability it's going to go above that. And the next logical, psychological barrier for this baby to retest would be my 35, which represents my previous swing point low. That held for a long time. It bounced from 35 all the way to 114 and then worked its way back down to break it. So watch for it to break 32.71, grind up towards this as a high probability, at which point it's 4 over and we're going down to new lows. Only time will tell. Meaning, can I sell the daily slingshot? Yes. If my weekly's still up and I'm not even quite there, my weekly's up and engages down, can I sell it? Yes. But take aggressive profits. If the weekly's still up, it's likely to fail and go back up. And could it be my slingshot engage, disengage, come up here, and then it finally makes 35, engages down and breaks new lows? Watch the cycles. Watch the cycles. Gold. Greg Tucson, you ought to be smiling, my friend. Where are we headed? Somebody type it in. If you remember our lesson, where are we headed, Marty? Where are we headed? High probability. Now that we've taken out that high, that's gone. Right? Let me take this out. Can't have a wave 2 green here. My 1-2, my 1-2 is still unfolding. We just broke a new high. To no one's surprise, we're going where? Andres? 1125/1135. 1125/1135. Now, as we started to bounce, are we going to go straight there? No, we had a little sideways movement here. Boom. Can we get a little more sideways and then boom again? Sure. Highly probable we're going up here. Even though we're at 115, 116, whatever the high so far, still should go a little further. And if this is my 1, 2, 3, 4 magenta going to 5 magenta, complete wave 2, that's where we should see it go. Now that we've taken out this high here, this can no longer be possible. I can't have my wave 2 complete now that I'm breaking another high. It's still unfolding in a likelihood of a 1, 2, 3, 4 going up. Well, the other possibility is, William Bruce, this is just the beginning. We're going much higher. Because this A is done. It's not still unfolding. It's done, and we're going way up here. It's possible that's the case, but not highly probable. So I want you to simmer gold down to 2 wave counts. Circling around wave 5. Is 5A here complete? Or is 5A, is it still unfolding here? Or is it complete and we're working on our way much, much higher? Well, again, I know we're still a long way away. But up until we break 1191, am I going to take this wave count seriously? Everybody good? Up until we go on and break 1191, will I really take that serious that this is part of 5A done and we're working on a big reversal? Need to go up and break 1191. Up until then, I still say we got further upside. So if 5A is done here and we're going higher, we're going much higher than 1125, 1135. We're going to eventually stair step and break 1191 and go on up, 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 up. Not the most highly probable. Highest of high probabilities is this one. Still unfolding, working its magic, and a series of 1, 2, 1, 2, 1, 2s. And the latest is part of this big combination correction over here, working its way in 1 green, 2 green, to then start a 3 of 3 of 3 of 3 down. So in closing, Andres, like we told you, don't look for this little dip to be the end. It's not going to break the low. It's going to go higher. It did. And as we pulled back here, the last classes of last week, said don't expect that to go this way, expect it to go that way. That's where it's headed. And why is that? Because my line of progression says so. My weekly is still up, right? Weekly still up. Trend momentum PAI, up, up. So that bodes well for further upside. My monthly is sitting there going, okay, weekly, I see you starting to do your thing. I've been engaging for months, but I'm just starting to flatten out. That's okay. It can even turn up a little bit. It's done that before, several times, right? Uh-oh. Has gold bottomed in reverse? No. 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 So I don't think it's bottom in reverse yet, so therefore I'm going to look for this to do the same. If this is to turn up, I'm going to look forward to it turning right back down. But in the interim, I know for a fact that we're not finished to the upside because I have a weekly trend momentum in PAI up. And my weekly not only is going up, but check out the daily. The daily is still pushing up. So what did we tell everyone the other day? Buy that daily slingshot. Why? Weekly's up. And the daily started engaging, and it took a little hiatus as the 4 hours cycled back, but it kept going. And it's still going, and it's making new highs. So in the coming days, could I see another daily turnover and slingshot up to get us to 25/35? It's possible. That it's going to take another daily slingshot higher. But James, this is beautiful behavior on this daily. Perfect anticipated behavior. When a weekly's turning up, a daily should try to slingshot lower and fail. When it does, I go long. And should it top and roll when the weekly's still up, days of downside pressure, but the weekly was still up, so what should it do? It should be forced to slingshot up. That's what it did. And this is the behavior I know in advance. I don't have to wait, Andres, till my daily disengage and go, yeah, now it's a failed daily slingshot. I knew it the whole time my weekly was starting to turn up down here, that when my daily should engage, it's likely to fail. And it did. So when it failed, can I go long? You betcha. Then when the daily turned over, if my weekly doesn't submit, meaning as my weekly trend momentum PAI turned down, if the weekly doesn't engage down or start turning, then it's going to force the daily to engage higher. And that's why I said buy this slingshot. And if you look at the swing point low when that went into effect, was down at about 1071. So it rallied about $40, $45. Well, what if I got in a little bit late? Well, you still got another at least 10, maybe 20 still left in that 25, 30, 1125, 1135 target. And is it still going to go straight up? No. My daily can stay up, but my 4 hour is going to start to depressurize, and it's going to require some little downward tick, right? So why are we starting to see price travel a little sideways action? The 4 hours depressurize, but it too should start to slingshot higher and higher as long as the daily stays up. And if my daily starts to turn over again after this big move up, my weekly stays up, what am I going to do? I'm going to buy the next daily slingshot. So your trade alert is to buy the next daily slingshot, and if we don't get one in the next few days and it stays pointing up, then buy the next 4 hour slingshot. Line of progression. Daily trend momentum PA up, I then buy a 4 hour slingshot. Up and until when the daily does flip and start turning back down, that's okay. That's certainly okay for the daily to turn over eventually. But I'm still going to look for another daily slingshot higher up and until price gets up here at its 1125/1135. At which point I'm going to look forward to a daily topping and rolling and the weekly turning over with it. And when we get the daily and the weekly turning back over, that's when we're going to expect the correction is over and downtrend is back intact. So in closing, John Young husband, up and until I see the daily and the weekly flip, we still should go higher to complete this wave 2. And is it possible it could be this 5A is over and we're going up here? Yeah. But again, I want to see it rally another 75 points, 76 points to break 1191 before I take it real seriously. But minimum, as I say, we should go up to this target, top and reverse. Any questions on that so far? Everyone understand the painting the Picasso, what the software should look like, what it's projected to do. We don't predict, we anticipate. That's why it's called the market price anticipator. And this is a clear sign I should have bought that because my weekly didn't flinch. During several days of downside pressure, the weekly never flinched and said, nope, I'm still going higher. Trend momentum PAI said, I'm up. I'm not turning down. I'm up. So the daily's forced to engage. Earlier on, the daily was forced to fail. Why? Because the weekly was up. Well, what about over here when the daily kept going lower, lower, lower? Why did it start to fail over here and fail and work its process? The difference was my daily started failing and failing because the weekly was turning up. So the difference between my daily getting lower lows, lower lows, lower lows, slingshotting lower, to most recently, it stopped the lower lows scenario and now it's getting higher lows, is because the weekly changed. That's the difference. So what I said earlier, I must look both directions, left and right, before I cross the street. I highly recommend you do that trading as well. Get your workforce in alignment, foreman and workforce for a buy cycle, sell cycle. And then once I have a buy or sell cycle and I'm going short or I'm going long, whichever cycle I'm under, I do want to look to the right to see, okay, am I buying into a corrective phase, expecting a lower low? Am I buying into even though it's corrective, expecting much more robust retracement? Like gold is expected to run toward the bottom of the cloud. So guess what happens when we break the purple line? We should run toward the bottom of the cloud, sitting there about that 11.25-35 range. Any questions? So I expect further upside. Is it going to go straight from 16 to 25? It's possible, but not likely. The 4 hour is going to depressurize. We're going to get a little chopping, overlapping sideways to lower correction while the foreman and workforce finishes the down cycle. Then they're going to go back to an up cycle, and I'm going to continue to look for the daily to slingshot higher in the coming days. Well, if I don't get a daily to slingshot next day, then what can I do? As long as the daily trend momentum and PAI are up, I can then buy 4 hour slingshots. But rest assured, if you're long on this, Greg Tucson, we're going to get some pullback because the foreman and workforce needs to move back to oversold. Then they can give us another push higher, headed back to overbought. And if my daily doesn't turn to depressurize into a slingshot, then I could buy the 4 hour slingshot. And eventually the daily may still turn and give us another slingshot higher as it breaks above the cloud, makes a run towards that 25.35. But bottom line, when we talked about this retracement, did we not say it must at least high probability to go at this high and a very high probability it's going to go higher, right? Got a big rally, a big sell-off, slingshot higher. It didn't quite make the higher high there, took a little hiatus, now it's made it. But it should at least make this high, high probability to make a higher high, and right now that's why I have this setting here for you to know that we should go up to our zone before reversal. And once this is over, if this is truly unfolding, we should turn back to some very strong downside movement again. Corrective, downtrend continuation. Corrective, downtrend continuation. Downtrend, corrective, downtrend, corrective, downtrend. And even in the midst of this, Greg, knowing it's 3 of 3 of 3 of 3, what does all that tell me? I get a 3 low, a 4 up, a 5 low, making the next 3, a 4, a 5 to make the next 3, a 4, a 5 to make the next 3, a 4, a 5 to make this. So what does that tell us? Once we're done, stair step, stair step, stair step, stair step, stair step, stair step. So it's not going to go from here to there. It's going to stair step its way. And what is stair steps? Cycling time frames. Cycling time frames. 30-year bond. Those of you that are trading bonds, futures contracts. 30-year bond is grinding and grunting. The daily starting to turn over. Last couple of days we got a little downside pressure. And look how beautiful this moved. It moved toward the purple gold line, bounced temporarily, went up to engage. So it did what? It engaged. Got a slight little disengage for a temporary moment, for a little bit of a rally, false rally, and then engaged back down, reached the cloud. As long as this daily stays down, my trend momentum's up, overruled. Well, what's the likelihood it's going to go breaking a new low when my weekly is trying to slingshot up? So this, all eyes will be on this weekly. Excuse me, there's my daily. I was on the wrong one. That was a 4 hour. So let's go back. Looking at the wrong time frame. 4 hours trying to engage down. Are we going to break a new low? Probably not. Right, William? Probably not going to see this go breaking a new low, because as my 4 hours trying to slingshot down, my daily's trying to slingshot up. More importantly, my weekly is still up. Trend momentum, PAI, yeah, red's starting to flatten out and turn, but blue and green are still up. So I don't think we're finished, even though we're getting a little pullback on that 4 hour. So what's a trade alert? My daily's sitting there ready to continue to push higher It's waiting for what, Andres? That 4 hour to finish. So your trade alert is to buy the 30-year bond when the 4 hour slingshot fails. We got a low, we got a high, we should end up with a higher low, and then we should go back and rally towards the previous high. When that fails, trend momentum back up, right? Overruling it right now. Red's hook, blue's hook, green's turned down. So that is turning down. Overruling this at the moment. But as soon as this turns back up, what happens? It releases the trend momentum back up. The daily, as the 4 hour continues to push higher, should continue to push and engage up. And my weekly is telling us that's the case so far, because that's what we're seeing. Weekly still up. Bottom line is weekly up, daily up. We're not finished. So this 4 hour is very highly probable to fail. And if I start to see this push lower, could it dip into the cloud level? That's okay. If it turns and hooks out, will I go long? Yes, with the expectation of what? That it should rally back toward this high. And likely could even make another higher high. Any questions on the 30-year bond? So whether I want to wait for the 4 hour, the likelihood it's going to fail is very high probability. And the likelihood we're going to bounce and make a run back up here is very high probability. How far along is the 4 hour slingshot down? The 1 hour is not finished. So we're not finished this scenario. Even though it started to bounce a little bit, it's pulling back. It's not over. The 1 hour is still down. So you see that, Andres? That's why it's not so, oh, the 4 hour is definitely going to disengage. I can go long now. Well, you should at least put your stop loss below that swing point. But the problem is the 4 hour could continue a little lower, stop you out, then disengage and go higher. So when am I likely to take this scenario? If my 15, 30, and 1 hour were starting to turn up, and I saw that, yeah, then I could take the swing point low, go along from there. But that's not the case with the 1 hour. It's still up. Excuse me, still down. Trend momentum, PAI down. Red and blue hooked out. Green is out. Trend momentums are down. We should see chopping, overlapping sideways to lower first. Then look for the higher low, then the 4 hour fails. So in closing, I'm going to expect the 30-year bond to bounce and go back up, make a run at the high. Once this Foreman and workforce cycle down finishes and we get the 15, 30, 1 hour up, 4 hour disengage, then look for it to rally back toward that high and likely to make a higher high. And why is that? Because the daily is turning up, overruling the flat trend momentum, turning up. And more importantly, as we look to the right of that, the weekly is still up. So that's a strong sign this rally to the upside is not over. Any questions? Everyone understands, day after day, not about A, B, C, 1, 2, 3. It's about the cycling time frames. And with a daily turning up, overruling trend momentum, flat, trend momentum's turning up. That means we expect further upside. The question is, when is this little dip over? That's when this fails. And when is that to fail? What caused it to engage down on the 4 hour? My 15, 30, and 1 hour headed lower. That's what caused this to engage lower. So when it disengages and fails, it's going to be because my 15, 30, 1 hour turned back up. So Andres, when can I buy the 30-year bond? When my 15, 30, 1 hour turns back up. And as it starts to bounce, if I see this disengage, then I'm going to expect it's not only going to start to bounce, but it's going to run towards the high. And last time we discussed the time frames and lower time frames, yes. We got a daily turning up. We got a 4 hour engaging down. Trend momentums are still up, but it's temporarily overruled. So we need to see the lower time frames as they break below the cloud, right? There's the 15, as you would expect, broke below the cloud. And it's slingshotting lower and lower. Why? because the 15 is going in the direction of the 30 pushing lower. Part of the behavior. The 30's working on it, bounced off the bottom, but is it over? Well, not according to that 1 hour.
This question is,
So,
from that entry point, when the stop is recommended to move to break even plus one position.
so yes, once you're into this and this, you're in a long position and you're stop, you need to move it into profit so that if it turns around on you, you get locked in profit. So you take an at-risk trade to no risk. But can we use that as the scenario? Once I start to cross above the cloud and my 4 hour disengages and fails and it starts rallying, and I cross above the cloud on lower time frame, could I put my stop at the bottom of the cloud? Yes. Right? So right now my 15 made it below the cloud. The 30 touched the bottom of the cloud but hasn't made it below yet. My 5 has made it below and is trying to grind. What happened here? Well, it didn't break above it. It slingshotted back down. Now it's trying it again. So if I see this turn and break above the cloud on the 5, and at the time my 15 is up, my 30 is up, my 1 hour is up, then I can use the 5 minute for a quick scalp to know once it breaks above the cloud, I can put my stop loss below the cloud. And then again, once I'm at break even plus one, at what point do I go to breathe easy plus one? It depends on your risk tolerance, but I don't want to see a winning trade turn into a losing trade, but you can't put it too tight either. So that's why as we break above the cloud, the likelihood of the bottom of the cloud coming down and breaking below it is extremely rare. All right? So look for this to grind and grunt. The 4 hour release is where we're going. Going all the way back up here on this platform for AvaTrade. We got a high sitting at 160.87. That's what I saw. Yes, 160.87. So we're looking at about a full point. And it should even go higher than that. It's about this 4 hour. It's not ready. So Andres, what can we see? Some more chopping up and down sideways. Chop, 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 chop. To perhaps even a little bit lower as the 4 hour finishes. My 15:30 1 hour finished the cycle, forcing the 4 hour to go. And once the 4 hour either turns from a slingshot down to a slingshot up, or it turns up, then that's part of your scalp up for about a point. And whatever that is, if it ends up this swing point lows intact on this 4 hour. So Gary, so say that again. What if we come down and we make a higher low as this finish and turns up, and this ends up being my swing point low here? Then that's basically the top of the cloud. You need to be below the top of the cloud. So say that again, Gary. What if my 4 hour turns and goes into the cloud? Then it's likely to put it below the cloud. Well, what happens if it's too much of, it's too far to get below the cloud on the 4 hour? Then, as I mentioned, once the lower time frames go below the cloud, break back above the cloud, and these guys are turning back up, then I can use the bottom of the lower time frame cloud. As it breaks above it, I can use below it. And if I want to do the 4 hour, what if we don't break a new low here? And this chops up and down and ends up with a higher low. This turns and hooks out and then grinds its way up. Then I can use that swing point low, which would basically be the cloud, put it below. And once I'm up so many ticks, it's up to you, but once I'm up X number of ticks, then what I can use is like a 5 minute parabolic. So what should we see when this thing is finished? Right? Once we finally get the 5 minute to cycle, it breaks above. And then, Andres, we start to watch the 15 turn and goes up. And maybe this stays green. Maybe it goes back to red first, then back to green. Because I don't think this correction is over yet. I don't think the 4 hours ready just to give up yet, because it's not showing signs of being over. So I would expect, as far as price action, chop, chop, chop sideways, perhaps lower, could even make another lower low because we're not disengaging yet. So that's why I can't say it's time to go long now. You need to put your stop loss down here. The likelihood we're going to break a new low below here, which is below this cloud, is not very likely. The likelihood we could break this little swing point here when the 4 hour is still turning down is likely. Make sense? So how do I know? Just let it play out. Let the 15 cycle, let it disengage and go down. Let the 1 hour finish. And when the 15:31 hour all together turn up, we see this turn and hook out. Then it's very likely wherever the swing point low is, that's going to hold, and we end up starting grinding back up. So what's the visual on that? Well, Gary, what if my 4 hour comes down further, disengages, and we're in the cloud somewhere? Or it turns from a slingshot down to a slingshot up, right? Maybe we extend another few hours and this turns into a, we've seen it before, where it goes from a slingshot down to a slingshot up. See that, Andres? Went from a slingshot down to a slingshot up. Slingshot down to a slingshot up. Well, if that's the case, I can buy it, and whatever that swing point low is by the time it starts doing it, we should be fine with protection. So on a lower time frame, we're going to see what? Once we start to break above the cloud, whether I use the 5 minute or the 15, and my what? 4 hour goes from a slingshot up to disengage and turn up, or from a slingshot down to a slingshot up, and I'm breaking the cloud on the lower time frame, then I can use my stop loss at the bottom of the cloud. All right? And at which point do you go to break even plus one? Depends on your risk tolerance. Knowing the 30-year bond tends to breathe a bit, you don't want to go up 2 ticks and go to break even plus one. You're going to get pipped out. Right? That's too quick. Under normal circumstances, you want to give it some room to breathe. And normally I let it go about minimum about 8 ticks. Right? That's about a half a point on average. So if I'm in this, depends if I'm just quickly scalping. If I'm just going to quickly scalp, Andres, then I'm going to just take my profits and close it. But if I'm expecting, say, I want to be in it for a point, then before I move to breathe easy plus one, I let it go at least 8 ticks in the profit, and I move my stop loss probably 2 ticks in the profit. It needs some room to breathe, because if I chase behind it too close, what's going to end up happening, it'll dip, pip me out, and then go on to make that point, and I go, what just happened? So let it breathe. Let it go at least a half a point, 8 ticks into profit, and then I'll use my break-even plus one based on that scenario. But again, there are times when we're talking a quick scalp and it's not worried about break-even plus one. My quick scalp is I'm going to let it go, and when I see sign and symptom that my rally is over, then I just close the trade for maximum profits. But if I'm expecting a 4 hour daily and expecting, point, 2 point, 3 point rally, then I let it go at least half a point. And like the question was asked many times, well, Gary, how much wiggle room do you need to leave it over the weekend? If I have a trade running and it becomes, Friday, and I want to know, do I leave it run over the weekend or do I close it? I generally must have minimum a full point of profit to more comfortably a 1.5 of profit. So I know that wasn't your question, but it's an additional address. So if I'm going to have a position open on treasuries or a futures contract, and I have a point to a 1.5, I would consider leaving it over the weekend. If it's anything less than a point to a 1.5, then I just close it, wait for another entry to get back in it. Now, back to the question at hand. The bias is we are going to chop, chop, chop further because we're engaging, disengaging, engaging, disengaging. And what's happening? My 30's trying, it's engaging, right? Depressurizing, engaging. Well, the 15 did it. Why wouldn't the 30? My 1 hour is trying to engage, disengage, engage, disengage, but it's still down. So I don't expect we're going to see anything more than this chop, chop, chop sideways to lower first, so my 4 hour can finish. When do I go long? I can do it when I see that slingshot go from a slingshot down to a slingshot up. When I see it hook and engage, I can go long. Well, when's it likely to do this? When's it likely to turn back up? PAI on the 4 hour. When's it likely to turn back up? It's likely to turn back up when my 15:30 1 hour bottoms and reverses. Well, what happens when the 15 bottoms and reverses, the 4 hour says no, it's going to turn over. What happens when the 30 bottoms and reverses and the 4 hour says no, it's going to turn over. So far, see it? So what happens when my 30 bottoms and reverses starts to depressurize, the 4 hour says no, it's going to force it to turn over, right? What happens when the 15 bottoms and reverse? It's going to force it to turn over, force it to turn over. 1 hour. If my 4 hour starts to turn, whether it's truly in a slingshot down to a slingshot up I go long, or whether it's just this turning and hooking, which it's already crossed the green line. See that? My red line has crossed below the green line. That means it's eligible for a slingshot down to turn into a slingshot up. And if I see that turn and hook up, Andres, then expect this is going to rally back towards that high and higher. Lower time frame, we still don't have a break above even the 5 minute. So I can't use this lower time frame scenario just yet. What could it do? It could run into the cloud and come back down. It could run in the cloud and run back down. It didn't break it here, went back down. Didn't break it so far. It needs to break above the cloud. At which point, when I see it break above the cloud, has the 4 hour started to show signs of turning yet? Yes or no? If the answer is no, and I still break above the 5 minute, and my 15 is up and 1 hour's up, then I could take a quick scalp. You know, tick, 2 ticks, 3 ticks. Because I'm not expecting that to go bang, zoom all the way back up here yet, because there's no way we're going to go rallying all the way up there without the 4 hour turning. Fair enough? If I get both, slingshot from a slingshot down to a slingshot up, my 5 minute breaks, then I can put my stop loss at the bottom of the 5 minute, and my 4 hours already turning up, then yeah, then expect it to stair step up at the previous high. This high here, sorry, 4 hour high. Any questions? This turns, we're going to at least expect this to go back up about a point to that high, probably higher, because my weekly is still up, that's a good sign, and my daily is turning up, that's a good sign. We should even go up, not only take this high out, but make a run at that high. Russell, very similar to the S&P, this little bounce and rally is going to be short-lived. I don't think we're going breaking up this way, Andres. I think this is simply just part of a little bit of a rally. It's going to fail and head back lower. So no matter how I slice it as we went through the S&P, and very detailed, yeah, we're getting a little depressurization, so what are we expecting? Part of that correction, yes. But it should end up with a high, a low, a lower high, and a lower low. Lower high, lower low. Lower high, lower low. GDX. Of course it's making a bit of a bounce today. It's supposed to, because gold is rallying. This is one of the plays we're going to watch in the future as we expect to get a bottom reversal and a big trend continuation, but I don't think this rally is it. We may rally a little bit more than likely go up into the cloud, probably this red line, fail, and then start heading back down. As gold prices reach the 1125.35 top and roll, look for GDX to do the same. So this swing point low we received early, remember when it was over here, that 1260 range, and it bounced at a higher low. And I said, I don't think that's the end of it. And it bounced at another higher low. I don't think that's the end of it. It went on to make a new low. Well, I'm back to say I still don't think that's the end of the road here. That we have further downside to go before official bottom and reversal, but it's all going to depend on gold. So if we go on and gold breaks at 1191, then yeah, we're going to start buying and looking to hold this for several months to several years. But I don't think that's the case. I think we're going to end up with another lower high and another lower low, as we have before, and I would expect it again. Well, Gary, what if we rally up a little bit more? Well, that's part of that gold. Could go, but it can't break 1191. So yeah, we could go a few cents higher, maybe even $1, maybe towards the top of the cloud, but I would not expect too much further on this rally, and I would expect it to turn over and make a new low, just like before. So Greg Toussaint, once I get my 1125, 1135 range on gold, I get that daily topping and rolling, that weekly turning over, and I get both the daily and the weekly down, then expect GDX to go down with it and make a new low, as gold will make a new low. So, in closing, what are we learning each and every day? It doesn't matter as we go through, and it's important. Yes, I wouldn't cover it if it wasn't important. As we go through the different time frames and we watch the different makeups of this process, right? The Elliott wave. 1, 2, AB, 1, 2. Is it 1, 2? Is it AB? Is it 1, 2, 3 of 3 of 3? What is it? Again, Al, it's not complicated to know that I don't trade without the foreman and the workforce. What does that mean? I need my trend momentum and PAI up to be a buy cycle, and I need the trend momentum and PAI down to be a sell cycle. I need the trend momentum and PAI down to be a sell cycle, and I need the trend momentum and PAI up to be a buy cycle. Well, it's not enough just to look at one time frame, because my daily could be smoking to the upside, and yes, long term, Hal, I expect, meaning days, I expect it to go higher, but in the middle of that daily moving higher, we could have what? A few days of downside pressure, because the lower time frames are cycling from overbought back toward oversold. So your timing is not to say, well, my daily trend momentum PI is up, Al, I go long at any time. That will require very large stop losses. So in order for me to either use very large stop losses or to take into consideration smaller stop losses, then I need to go to the lower time frames and let that cycle finish, so that once the cycle is finished, now I don't need to come way down here to a previous swing point to take it. I can use, well, bouncing off the gold, I can go to purple line. Or if I bounce off the purple, I can go to bottom of the cloud. Or as my time frame cycle, and I start to get an engaging slingshot, then I know I can take this swing point here, meaning it between the purple and the gold, I can put it below the purple cloud, which would be a very small stop loss. Because my 4 hours up, my 1 hour is up, my 30's up, my 15 is up, and my daily's engaging up, so that swing point is much closer than waiting for a daily to finally turn over and engage again. This baby could move down substantially before then turning back up, like it's done before. And before there, it did it here, right? The daily could several days down, and price could move several dollars. So that's why, well, I know I'm bottoming and reversing, and I got a failed slingshot here, we're rallying, then we should not go to break that low. Well, when I'm way up here, I can put my stop loss there, certainly down here, and be very high probability we're not going to hit the stop loss, and we're going to end up making a profitable trade. But why wait 4 days to go against you plus, before then another several days to just get back to positive territory? That's why you let the cycles unfold, play out, then the signs and symptoms tell us when to get in and when to get out. And what's this little take profit trigger starting to fire? It's telling us that we're getting toward the top of the cloud. Well, that could be some resistance level. Well, Gary, you said it's going to 25, 35. Yeah, but my daily's back in overbought territory, so there's no reason you can't skim a little bit off. And if you don't have anything else to skim, then I would let it pull back and let it go higher, because the projected path is to go to 25/35, 1125/35. So in closing, I love and appreciate each and every one of our members. You're in the right place. You're following the line of progression is the only software you will need. Follow the line of progression keeps me on the right side of the trade. And when I do get into a trade, can I have a loss? Yeah. Losing trades are part of the learning process. There's no system out there that will absolutely prevent a losing trade. Doesn't happen. But as you follow the rules, your losing trades will become less and less, and your winning trades will become more and more. And my targets, that's why I tell you guys, don't just bail because you're up 50 cents on gold. This baby's supposed to go to another $17, or minimum another $8. 8 to 17 further. Why? 25 to 35. But is it going to go straight up there? No, it's going to stair step. So again, good day, good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor, and we'll pick this up again tomorrow. Andres, watch as we break above the cloud on those. If I'm breaking in that 4 hours turning, then there's no questions asked. The bottom of that cloud's going to hold because it's soaring back up. The key is patience to wait for the 4 hour to show signs. Well, the whole point is out there and above once the 4 hour does fail. And I need signs and symptoms at breaking above the cloud to start to warrant that scalp. And if you're worried about where do I go to break even +1, you need to have at least a half a point to 3/4 of a point before I move and break even. But if I am scalping, then I could take it at 3 ticks, 4 ticks, right? 2 ticks. Get in, get out. It depends what I'm trying to accomplish. But if I know I got a whole complement of a foreman, workforce, daily, etc., all behind me, then I don't expect the 2 ticks and close it. I expect it to go to 4 ticks, 2 ticks, 8 ticks, 4 ticks, chop, 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 sideways to higher and breathing. But yes, ultimately run up at least a half a point to 3/4 of a point before I move my stop loss into deep profit. Best case scenario to make it where it's a no risk trade, if I'm up a half a point, I can move my stop loss to break even. Meaning if it reverses on me, I don't lose anything. I don't win anything, but I don't lose anything. But I need to give it room to breathe. I cannot let it go to, say, 6 ticks and put my stop loss at 4 ticks in the profit and only give me 2 ticks of breathing room. Not going to work. You need to give it at least 6 to 8 ticks of breathing room.
Bob says, how many pips are in a point, or are they the same?
1632 ticks. Gold ticks, as far as this MetaTrader platform, gold is ticking in cents. So it's by pips. Pips relate to setting the trade management system. 1 pip is equal to 1 cent. So you need at least 500 in separation, about a $5 move, in order to take profits, if that's helpful. So when I set my gold trade with the trade management system, it needs to be 500, 1,000, 1,500, 2,000, 2,500. It needs to be big 500 increments representing a $5 move. All right? That makes sense? So yes, that's a good question. So you can't have 25 ticks expecting gold to take profit at 25, 50, and 75 because it's too tight and it's going to error out. Not the trade management system, but the broker will say you can't do that. Price is too close to current price action. So about a $5 move or 500 tick scenario, pip scenario through the trade management system is where you need to be. Okay? Increments of 500 is how I use on gold. As you can see here, I normally lose by 500, 1,000, 2,500, depends what I'm trying to accomplish. And what is that same $2,500 scenario? That's a $25 move, that's a $10 move, that's a $5 move. So if we know we're sitting at another $7 move to 25, another $17 move to 35, then we could put that at, maybe take profit is at 700 and 1,500. Okay? All right. Y'all have a good day. We'll see you tomorrow. Take care.